Good. So my thought is to kind of go through a little bit of the role of the auditor and go through the statements, and going through the statements kind of in the context of what they mean and how they fit in. If you have questions as far as, what numbers are, please let me know. And between Kathleen and I, we'll do our best to answer them. And then we'll go over, there's a couple letters that you see there, internal control letters and management letters. We'll go through that at the end. So firstly, the role of the auditor. So for the role of the auditor is to look at the controls and processes and kind of look at the financial state, prepare the. Yes. Oh, now it's back on. Perfect. So what this is these statements are yours, and it's management who's responsible for these. They're not Bella Bovino statements. What we're doing is, on the next page, you see we're providing a report on if they're correct within accounting standards pieces. So at the end of the day, these statements are yours. They're not ours. They're the town's. So the next page, A2, leads into our independent auditors report. So within this report, you see, in our opinion, these consolidated financial statements present fairly in all material respects the financial position of the town of Lunenburg as at March 31st, 2024, and the results of its operations and changes in its financial position for the year then ended. So kind of in the terms that we kind of look at there, that would be a clean audit report, might be the terminology you've heard prior. So that means, as far as what we've done and what we've looked at, everything is good. There is a little bit, there's another matters comment there. It's the third paragraph down. So there's two sections to these financial statements. There's section A, which is the consolidated, and section B, which is the non-consolidated. So the non-consolidated is kind of, those are the statements more so how you operate. You have an operating fund, a water fund, an electric fund, and the cemetery, and some other pieces within it. Those non-consolidated statements are not audited. So they're in this package, but that's why the matter is there. So we don't audit those. Now, from a practical perspective, in order to not audit the consolidated statements, we're doing work on each of those funds to build it. And you'll see there's some slight differences within those statements compared to the consolidated. So we'll get to that as we flow through it. I'll draw your attention to. So now if we want to go through to page A4, so this is the consolidated statement of financial position. For those more familiar with private, this would be your balance sheet effectively. So it's broken out slightly different. So we have our assets. So we have assets that are classified between financial and non-financial. So basically the top line are assets that can quickly convert to cash, if not they're cash already. And then under that, we have your liabilities. That includes all your liabilities, whether they're long-term or short-term. So the long-term number is the total number, and that gets you to your net financial assets. So that means basically if all your liabilities came due today, you were able to convert everything into cash, you would be able to pay off your liabilities. Then following down below, we have your non-financial assets. So those are the assets that aren't quickly really converted into cash. So that would be your tangible capital assets, your buildings, your roads, and all of those pieces. And then inventory not held for resale, because you have inventory on hand within water and electric that you're not planning to sell. So you wouldn't sell them and convert them to cash. And then you have prepaids where you've already sent the cash out. So you have a prepaid expense sitting there. So that has no ability to convert to it. And then that gets you down to your net asset and your municipal position. So your municipal position, you have a surplus of 547,000, reserve funds of just under 8.5 million, and then investment in capital assets of 37 million, getting to your municipal position. Yep.
Just wondering, Michael, the note 6 for the liabilities. A lot of my questions are going to be questions of me trying to fit the whole package together, so I have a good understanding and all, and I like clarity.
Yeah.
So I'm just wondering why the decision was made to put the temporary borrowing and the long-term debt on 2 lines on the statement of financial position on 8.4, but add them together in the long-term debt note. Because it meant I had to go look and see what added together, right? So I'm just wondering why it's thought that that's the better presentation.
From a point of view of the temporary, so the rest of your debt is long-term, and I know it's grouped in and the presentation probably is a little sloppy. Looking through the statements, I don't know if we.
That's the temporary, that's.
Yeah, it's a temporary borrowing. I'm not sure if we made a decision
That
of
was supposed to
whether
be.
it was good or not, but the temporary borrowing, what that is you're in the spring and the fall, if I'm correct, you can go to debenture with the province. So when you fund your capital assets, you either fund it through grants or you fund it through debt. And sometimes if it's going to be funded through debt, it goes as temporary borrowing first before it gets converted into a debenture. I know that's not answering your question necessarily on the presentation point of view, but that's where it fit. It could, like, in theory, it could be lumped together.
And the province do not, they actually provide us with debt reconciliation records. The temporary borrowing is always separate and apart because it's more of a short-term type of loan until you go through the full borrowing process.
Sure. Add it to the note at all then. In note 6.
Because it will
You're
be.
required.
Yeah, a lot of this ties into the financial information return as we go through it. And generally temporary borrowings historically are there 1 year and it would have been done. Now for different reasons this year, that didn't occur. It didn't go to debenture. There were other things going on, but normally there would be a breakout and where it's there the same one each year. It is kind of off, but that's the presentation.
Okay,
Sure.
thank you.
That temporary borrowing was satisfied in, I think it was April or May of this year. So that has been borrowed and it's in the long-term category now.
Right, so A.5 would be your consolidated statement of financial activities. So this would be your income statement in those terms. So the top line, just a couple things to note there. So the top line, assessable property taxes, that number has the school board appropriation netted out against it, which is required by the standards. When you go to the B section, you'll actually see that as an expense down below because you don't have to follow the same where it's an unaudited versus audited. So that's one of those differences that you'll note if you're going through it trying to reconcile. So there were revenues this year of just over just under 20.2 million, and then expenses is 17.7 million, giving you net revenues for the year of 2.4 million. So within each category, kind of your expenditures, that includes, that includes expenditures on wages or utilities or whatever within that each department. The breakdown in the B section gives you a little bit more detail of what makes up those numbers. So we'll keep going through. So A6 is the statement of changes in financial position, kind of linking it to other statements you might have seen. This is basically your cash flow statement. So it's showing how, what happened with your cash during the year in order to get to your final position. So you had an increase in cash balance of 1.6 million for the year. A7, so that's your statement of changes in net financial assets. So that's that number I was referring to before of, readily convertible to cash less your liability. So how did we get to that number? So it's a similar breakdown there. So now just to flip through to the notes, A16. So A16 has a note about the garbage disposal site. So the town still has a vested interest in the disposal site. For the consolidated purposes, we've written that down to 0. From an accounting standards point of view, that we felt it was impaired and is written down to 0 prior years. on your non-consolidated financial, on the non, in the B section, because it's not audited, that vested interest shows up in those, on those statements. So you do still have ownership. It comes down to, from an accounting standard perspective of if we view that there's value there or not. And so that's why we recognize it as impaired, and it's written down on a consolidated basis, but not on your non-consolidated. It doesn't mean you don't own it. You still have the vested interest. And then on A19, note 14, this is important as a audit committee. Part of the requirement is to present council remuneration and expenses paid, and as well for the chief administrative officer. And the last piece is the hospitality expenses. So that's within the framework of the audit committee. So that's why that note is presented there. So that's all I really have on the consolidated basis. If anybody has any questions, thoughts, or concerns, we can kind of dive in and go a little bit through the B section, which kind of breaks down more what you have. Everybody good? Perfect. So if we want to go to B1. So this is the statement of operations. So this is dealing with your general fund. So like I referred to before, you have the general fund, you have the cemetery fund, you have the electric, and you have the water utility. So those are kind of the four different, and within each of those, you have a capital fund and reserves, etc. So within the general fund is not allowed to show a surplus. So what happens here is you see there's a small surplus of 5,300. Next year that gets transferred into reserve. So the prior year there was a just under $2,400 surplus. So it's required that gets transferred into reserves. So if you're following along where I've mentioned the property taxes previously, so at the top, they're tax collected. So that's a gross number, and the school board appropriation is down below in the expense line. So within that, you have your general government, protective services, transportation, environmental, public health, environmental development, recreational, cultural services. So those are kind of how you operate. And then within those fiscal services, that's where transfers even to, an operating reserve, capital reserve, and those transfers are still an expense. So on consolidation, we don't recognize them, but within the general fund itself, we recognize that as an expense.
Question. So is the expenditures on B1 are different from A24? Is that an allocation of the school board?
Which one are you referencing?
B1 expenditures,
Yeah. B1 expenditures.
the totals.
Yeah.
I guess my question was, why are they different?
On
from
the consolidated
24
state.
segments?
Yeah. So they would be different because some stuff gets moved out on consolidation, and there would be amortization wouldn't be in the amortization is recognized in the capital fund of the general operating. So they won't completely agree.
Okay, so thanks.
So B2, this is your balance sheet for the general fund. A couple things to note here. The due to, so you'll see kind of in spots, you'll see due from cemetery fund, due from electric utility, or due to electric utility as a requirement when that due to, so we'll just pick the electric utility. So that shows there's a receivable of 194,562. Those have to be paid out each year. So I forget which time you do it, but you make so that the finance department in January actually moves that money. You can't just sit there where if you're used to kind of private companies or those pieces, they might have related party balances owing that just kind of sit there forever. As a requirement within the municipality, you can't have that. The money actually has to flow. And the main reasoning for it is within the reserve funds, you end up with due froms. Well, if the money doesn't move, it's irrelevant to have the reserve because it's not funded. So that's why the money moves after year end, because we don't necessarily know what those numbers are going to be until it's finalized. But so the money moves to make sure that your reserves are actually funded. So if you have reserves of $1 million, you should have cash of $1 million kind of piece. So B3, so this is where the funds get broken out. So this would be the capital fund of the general section. So any capital related to kind of the general operations of the town sits here. This is where the debt related to that would be as well. One thing that may be new is the asset retirement obligation. So that was a new standard that came in last year. So what the asset retirement obligation says is there's some assets that you hold, and the easy example being, there's buildings with asbestos in it that at a point in time that you're going to dispose of that asset, that you're going to have to clean up the asbestos to sell it to someone. So what the standard does, it actually wants to set up that liability, even though it's off in the future. So it sets that liability up so that basically that liability is coming, and it goes against the cost. It adds to the cost of the asset and then gets amortized, similar how other assets get amortized. So that number gets adjusted each year based on what the main ones you have here is asbestos. And then so you're recognizing that expense. So when you actually, pay $10,000 to get it cleaned up, that $10,000 won't hit as an expense in that year. It'll actually just reduce that liability because you've already recognized the expense.
Could I just jump in there, Mike, for a second?
Yeah, absolutely.
Could you do something funky with that? Like create a fund that would extinguish the liability and would grow to allow for cleanup with the funds that were set aside? Or would that not extinguish the liability?
I'm not sure if I'm following your.
I was just, yes, but it's not set aside specifically for this, right? It's just, it's not funded, right? Is there some advantages to funding it? If you funded it, would you get rid of the asset and the liability and clean up the balance sheet and income statement, well, balance sheet? Or no?
You still end up because there was $6,000 roughly, I think 6,300 that was paid to clean up asbestos this year, but you still end up with an accretion expense because so you paid the 6,000, which brought the liability down, but it didn't take the whole liability. So the liability actually increases based on kind of present valuing as you go forward. If that makes it's a very weird concept.
I was thinking you might be able to treat it a little bit like you treat a pension, for instance, right? You identify the liability and then you set aside an asset to cover the liability, and it kind of is. If the fund covers the liability, then it's.
Yeah, you're not required to fund the ARO.
Okay.
The benefit of what it's doing right now, and this is kind of from an overall, I'm assuming why they brought the standard in, is now we've at least identified that a liability that has always existed.
Yeah.
It's just never been presented on the financial statements because the asbestos was there years ago. And there was clearly a liability, but now we were required to bring that liability. So, but you're not required to fund it. So
You're not required to fund it, but if you happen to fund it,
if you happen to fund it,
then you'd be recognizing that there's a liability in the future that you reserve funds to cover. So.
if you happen to fund it, what would change on your financial statements is in the asset section, you would have $313,000 cash.
Oh.
I think that would be the flow through of it.
Okay, thank
And
you.
you would end up with basically, assuming it was from the general fund, you would end up with an expense, a transfer in the general fund over so you would be effectively funding it and you'd have the cash there.
You probably have a note disclosing if that liability is in the future.
Sure. Yeah.
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 Well,
Okay.
you wouldn't eliminate the liability. You don't eliminate the liability until you pay construction company A to come remove the asbestos.
Right. And it could be wrong. It's a best estimate of the cost.
Exactly.
Yeah.
Yeah.
Okay. Thank you.
Everyone loves when accountants talk.
They do. They do not.
So that's the capital section, and there's some more details in there. But I would just jump through, if everybody's okay, to B12, which is your cemetery fund. So the cemetery fund, how it operates in general is and this year is an unusual year. But in recent years, the general fund covers any deficit that the cemetery has. So the cemetery always breaks even. So this year there was actually a surplus without that transfer. So just as the general fund would cover a deficit, there was a small surplus of 6,566, which was then transferred back to the general fund. And following that, there's the balance sheet and pieces, but as far as the cemetery goes, I'll just jump through if that's good. So B14 is your water utility. So this is the statement of operations, your revenues, your expenses, interest earned, all those pieces. One thing to keep in mind when with these different funds is, if you have employee A doing kind of one thing, so if they're down in an office downstairs, and even council remuneration itself, that is going not just to general fund, because there's aspects of everybody's jobs and it's at different ratios depending on someone's spot. But so it could be, half of their wages are in the general fund and half of them are in water, or it could be a third are in general, a third are in water, a third are in electric. So when you're looking at these expense numbers, that could include 1/3 of a person or 25% of the person within it.
The other thing about the water and the electric is that we are governed by the Nova Scotia Utility and Review Board. So council make application to actually have the rates approved that support the utilities. So, and then the Utility and Review Board do the final approvals of these. We did one, I think, 3 years ago on the water.
Perfect. So kind of the one piece that would be kind of different looking at these statements is down in the non-operating expenditures. So that's where we have the, principal payments of paying down debt, the interest on it, and then the transfers to the water's capital reserve or land purchase reserve or membrane reserve. So that's where you're putting money aside. And you'll see at the bottom dividend to town capital reserve. So that's where the water utility is actually transferring money to the general fund into their reserves.
And that money has been being put aside to fund future fire trucks. So it's like a hydrant. We take it from the hydrant fees and we put it into a special reserve for the fire truck debt that helps to pay for those trucks every year.
So B15 would be the balance sheet for the water. I think that's probably pretty straightforward. B16 would be the capital fund, which very similar to the general fund. That's where your assets are. That's where your long-term debt. But you'll also see your reserve for capital purchases. So on B16, so there's 2.2 million of reserve for capital purchases. So that's money that's been put aside for future use. And so you'll note when we talk about things being funded, so there's 2.4 of cash. So you have that funded. And there's a deeper breakdown on B18 of what those reserves are. So there's general and equipment, land, and depreciation funds. So correct me if I'm wrong, Kathleen, so the amortization, when we take amortization in the water fund, that has to be funded.
Yes,
That has to be funded where we recognize amortization in the general fund on other pieces, that doesn't have to be funded. And that's back to Kathleen's point of the UARB and all of those pieces to operating that way. So B20, so this would be your electric utility. So kind of the similar idea as far as, when you're looking at those expense numbers, there's a piece of council's remuneration in there as well that it's covering. And then similar to the water utility, we have, non-operating expenditures. So you have your principal payments and paying down debt and all of those pieces. So there was a deficiency in the current year of 160,000 roughly, but an overall surplus of 287,000 over time. And B21 would be the balance sheet. I think that's straightforward. We touched on most of those pieces. And then B22 would be the capital fund of the electric utility. That's similar to the water utility in that it has your reserve for capital expenditures. You'll note the asset retirement obligation as well. So you don't have asset retirement obligations in the water utility, but you do in the electric, in the general fund, as we mentioned before. So if you want to go to B24, that'll show the breakdown of the capital reserves in the electric fund. So you have depreciation funds, you have equipment, and then you have substation. Or had substation, I should say. So that's just a deeper breakdown of how we got there. B25. So you would have noted on a couple of the other statements on your, when you're looking at long-term debt, it referenced for perpetual care. So the perpetual care fund has actually basically done long-term financing to the other funds. So you'll see the town capital fund, there's 3 of them still outstanding there for 32,000, 48,000, 37,536. So that's lending, in fact, kind of lending to yourself in a way. If you were wondering there. So then B26, so this gets into the operating reserves. So this would be the operating reserves of the general fund. So you have your streets and sewer, your recreation, Safe Start, the LAF fund, Housing Accelerator, Pro Kids, and the operating surplus reserves and Region 6 diversion. So you have various reserves for various reasons and doing transfers there. So you're funding, those are where any long-term projects that you're looking at or any of those pieces where those reserves are being held and funded.
Excuse me. How does a reserve come to be? Like, what are the requirements? Is that a decision of council? Is it a decision of the MGA?
The MGA does give you parameters, but normally if you're doing a special reserve for a project that is not determined to be a capital nature in the MGA, then it is a special operating reserve. So with the Housing Accelerator Fund, we received monies from the provincial government, I believe it was provincial, and that money was to be set aside and utilized for a purpose that council felt would be useful in regards to the outline that they provided for Housing Accelerator. So that's a special operating reserve. If it's, when you look at our special capital fund, which Michael will get to, but we also have categories that, so if you have the wrap up of a fund, those surplus funds have to go to special capital reserve. De-transfer tax, because it's going to be used for a capital purpose, that has to go to the special capital reserve. Anything of a capital nature goes into this fund if you are starting to build funds for a project of a capital nature. Not saying that you can't use your operating reserve for that, but the MGA does give you very specific instructions as to what has to go into capital, more so than operating.
So yeah, so that's the operating, and then as Kathleen just referenced, the special reserve one is the capital reserve. The statement of capital reserve was on B29, so that shows the breakdown of those funds. And you know, if you sell equipment, for example, that has to, the proceeds from the equipment sale have to go to the special capital reserve. That's a requirement, but there are reserves that you've decided to fund each year if you know something's coming down the road. B30, so this would be B30 would break down the debt. So kind of breakdown of what the debt was used for. You know, what you've paid down this year, what the interest is on it, what all the rates and what all the terms are there. So if you're looking for those pieces, and then B32 is the capital statement of capital financing. So that's basically, you know, in short, it's saying, you know, you've acquired $2.4 million of assets throughout the year, and then it's looking, okay, so how did we purchase those? So you know, your options are basically grants, borrowings, contributions from other organizations, or using your reserves, or using transfers from capital. So basically using your own money. So that's a breakdown there. You've been as a town over the last several years, you've been very fortunate to to really tap into that federal and provincial grant spot and other avenues of financing other than debt or your own money. I know that was quick, and I hopefully it was more, I was trying to get more informative to give you an understanding of everything. I know I didn't touch on the numbers too much there, but I know everyone's had time to look at them. I'm happy to answer questions, or we can jump to the letters. I'll just look for eyes and I'll keep going if no one stops me. So as part of the audit, there's two letters that we as auditors are required to prepare and submit to you and to submit to the province. So the one letter would be the internal control letter. So as part of the audit, we evaluate and we test your internal controls. Sometimes we rely on it in order to reduce the risk of material misstatement to a level that we're comfortable with. So within that, if we ever identify, a control weakness per se, then we would bring it to their attention, and it would end up in this letter. There was nothing that's been brought to our attention. I'm happy to say that, within the town, internal controls are taken very seriously. Oftentimes, if there's changes being implemented or anything of that nature, I'm normally getting a phone call and saying, what are your thoughts? Like, we think this works and kind of thing. You should be very proud of management for the approach that they've taken as far as internal controls. So then the second letter that we have is what's called a management letter. So within this letter, we just kind of outline anything that really doesn't fall under internal controls, but maybe we want to bring it to your attention. So the couple pieces in this letter, we have to request of staff or management if they're aware of any fraud or negligent or errors on those pieces. So nothing was brought to our attention through those inquiries. So that's kind of there. The second piece is these financial statements and the financial information return were due on September 30th. That's the due date each year. Now, this year being a year where that really wasn't an option, so we are late as far as the province is concerned. I know management's been in contact with the province to let them know this is the scenario. They'll never say that's okay, but I think they just say, we'll get them when we get them, as long as you're making an honest effort to get them, in a time frame that's reasonable for everybody. So that's just in the letter for that purposes. And then the other piece, as far as when we're evaluating internal controls, is and just where the new council and those pieces is to evaluate the risk. So us as auditors, we're evaluating the risk. We're evaluating the risk more in a financial sense, which I would encourage everyone to do, annually, or, to consistently look what are high risk areas. But to beyond the financial statements, I think it's prudent for council and management to look at, what are the risks, whether they're financial, operational, policy, or whatnot. So, what areas within the town are high risk, and then if you identify them, there's cost benefit to everything that then and our auditing lingo is kind of to mitigate risk is what we're trying to do, or minimize it, because there's always going to be some level of risk. So we would just encourage yourself and management to do an evaluation of high risk points, whether they're financial or operational or policy, and get into common practice of doing that. And then it might be that there's a high risk area, and you look at it and you say, well, we've done everything we can do to mitigate it, so it's just going to be a high risk area. Or you might say, oh, we could try this. So that would be just a piece of from our end to identify that and to make it a consistent process that you're doing, be it annually or quarterly or whatnot. And with all of that, that is all I have. Unless there's questions or comments, I'm happy to answer them.
Thank you very much, Michael. Thank you very much, everybody, for, being here listening. If you have any questions to Michael, now would be the.
Sorry. I would be remiss not to thank the finance department for their hard work. We had a new crew show up this year to help with the audit, but all your staff are wonderful to work with. They get us what we need. They're, you know, they're consistently available. So we do thank Kathleen and her staff for that as well. Sorry, I should have started with that.
No, thank you very much. And again, yes, so thank you very much to Michael and to his colleagues at Bella Bovino. Thank you so much to our finance department. Greatly appreciate it. As always, the books look phenomenal and you've done a great job. One thing I would just like to highlight, the deputy mayor and I did meet with Michael this afternoon to go over some things quickly. And some of the things that, you know, aren't highlighted in this, but we've done quite well in a lot of departments financially, but a lot of that has to do with the fact that we're not staffed fully in a lot of departments. And again, that's a lot of stress on those that are with us right now. So again, I do thank Kathleen and her staff because that's one area that we are certainly advertising right now for a position and other areas. So again, based on where we are in staffing right now and everything else, this is a phenomenal job. And again, thank you very much. Every time we've ever asked Kathleen or the department downstairs for anything, they've always come through. So again, thank you very much. Does anybody have any questions for Michael?
I do. Well,
Rachel, go ahead.
it's a question on your recommendation about evaluation. So I gather from what you're saying that to your knowledge, there's not a periodic procedure for that, and that you're recommending there be one. Is that my takeaway?
I think that, yeah,
So I guess I would,
I would say it's probably being done informally,
yes.
because I do get calls for changes, but from an upper organizational level within our audit, I don't think I would have enough to know if that's happening. But you know, there are organizations that have risk matrix that they do and stuff. And I'm not sure if there's a requirement, you know, there's the cost benefit to everything. If there's a requirement at that level, but I think if there's a more, you know, formal of, you know, we're going to set aside a day or that piece to look at that would be kind of what I was getting at, if that makes sense.
I was wondering if it would be something that the audit committee could, that management could present to the audit committee on whatever, once a year or twice a year, or whatever the thought was, met the need to, if you want to consider something like that, to go over the, you know, what has changed, what's been done about the changes, nothing to, like, not a matrix.
Yeah, I agree. I would agree. I agree.
Anyway, I just put that out there. It's not necessarily something you want to decide now, but perhaps it's something that we can implement.
Well, I do agree that, as you can see in the minutes, we haven't met as an audit committee since not last October, I guess the October before last. So 11, 12, 13, 14 months ago was the last time the audit committee met. So I think that if we're fortunate enough to have two qualified community representatives wanting to sit on the audit committee, and maybe if, you know, we can look at that in our strategic planning sessions and maybe have more of a, you know, twice a year audit committee meeting with sort of a half year review and then an end of the year, like we did here tonight. I think it would make perfect sense because, you know, looking at the numbers and looking at situations a couple of times a year probably isn't a bad thing, because we're not talking about a small amount of dollars here. There's quite a bit of money we're dealing with. So again, I do think it's something we should look at down the road, Rachel. And I said, we're very fortunate. We have a very qualified community representation here as well. So, you know, I think that when you have two accountants sitting in the front of the room and they're willing to volunteer, we should take them up on it. So thank you very much.
You are required, the audit committee is required to meet twice annually.
Excellent. So we'll have to start doing that this year. Okay. I think due to some extenuating circumstances, as we all know, starting in probably April of last year, got in the way, but we're moving forward now. So we'll definitely meet twice moving forward. So again, if nobody has any other, Dan, go ahead, sorry.
And Jamie, I know that everybody's here, which is great. All council is here, but you have many committees that operate without the commitment of all of council. And I don't know if that was specific to this like in your bylaws about this committee. I don't know the answer to that. But it's possible that it could operate like a different committee where maybe we're not taxing all of council for all the audit committee meetings, maybe just for the approval of the statements or anyway, I suspect there's leeway to have a committee that doesn't necessarily involve everyone, although everyone might like to be involved. So maybe, and I don't fully understand my role and responsibility. So it might be good if somewhere along the way that was included in a discussion of what the audit committee does. So, and I think that I can't speak for Rachel. She's quite capable of speaking for herself, but we might be able to help you draft that if that was something you wanted. So that's it, just a comment.
No, that's a great comment. And quite frankly, when we came in tonight and the deputy mayor asked where the community representative said, I said, I went like that because the one audit committee meeting that I was at, we didn't have a full slate of council here as well. But I think what you've seen tonight is in our bylaws, all council is on the audit committee. But I think once we get going along, there'll be sometimes the odd councilor might not make the audit committee meeting just because it's, you know, they're busy with other committees things. So you're right. So maybe that's something we can look at as well. And I'd leave that with Kathleen and her department maybe. And I'm sure if you have any questions about the role of the audit committee, Kathleen or Hillary might be able to update you on that role.
There's also online, there is a series of 5 study classes that have to be taken by the audit committee over the next number of months. We haven't told you about those yet because you've had a lot of training going on right now and we've been extremely heads down. But I will ensure that I send that through to Hillary and we can chat about getting that organized for the new year.
Excellent. Thank you very much. The one thing about the team here, since basically November 1st, we've been doing a lot of training and learning, and I'm sure we'll be interested in learning about the audit committee as well. So thank you. So again, does anyone else have any comments or questions? Deputy Mayor?
Just really thanks all the way around. Like, so I'm very grateful to our staff. I know it's been a hard slog and I'm very grateful that we're at this point, and also very grateful and pleased to have such great representation from the community on our audit committee. And we're all going to learn what our roles are together. So it's wonderful to have you here, and also to Bella Vovino, who have been a steadfast supplier to our demand for audit services and have always done a stellar job. So kudos to all. Thanks very much.
Thank you. So now we do have a recommendation in front of us that the audit committee receive and authorize the mayor and CAO to sign the audited 23-24 town financial statements. So who would like to move that recommendation? Been moved by Councillor Fullerton, seconded by Councillor Babineau. Any discussion on the motion? All those raise your right in favor, raise your right hand. Opposed? Motion carry unanimous. Seeing nothing else, we're not going to set a date tonight for the next meeting, but we will have another one hopefully in the spring, and we'll get the training stuff out in the new year. So thank you very much. Motion for adjournment. Hey, moved. Meeting adjourned. Thank you very much, everybody.